Welcome to the Remarkable Retail Podcast, Season 8, Episode 10, presented by Salonis. I'm Michael LeBlanc.
And I'm Steve Dennis.
Our very special guest in this episode, joining us live from London, is Michael Ward, CEO of Harrods. Michael will be live on the stage in Paris, and we caught up with him to check in on what was happening at one of the world's most famous department store brands.
Yeah, when I think of a truly remarkable store, I think Harrods has got to be one of those that pops up on the very, very short list. It's if people have been there, they will know. If they haven't been there, they should go check it out. I'm actually, as I mentioned, I think in the interview, going to be back in London in a few weeks, and I'm looking forward to getting back into Harrods because it's been a while, I think about 10 years since I've been there. So I imagine a few things have changed, but I also suspect a few of the things that are really extraordinary are still in place. So yeah, really, really interesting discussion. Before we get into the news, we haven't begged, or I should say asked nicely, for reviews, but we would love if our listeners would go out and drop us that 5-star rating and review on their favorite platform. Why don't you go do it right now? We'll wait. All right. Thanks so much for doing that. Now, on with the show.
All right. That was fun. Yeah, it really helps. Those ratings helps us to spread the word. All right. Let's get to the news. So let's start where we often start. Not always, but let's start at a bit of macroeconomic news. So we got CPI, which is another proxy for inflation. And what do you make of that? And what do you make of that impact out of the month of, February when it was published?
Yeah, we got both the consumer price index and the producer's price index, which is essentially the cost of wholesale items. And I'm not sure to what degree this was a surprising some, I guess, in that they ticked up. So as most folks will know, generally speaking, in the U.S. and some other markets, inflation has been coming down fairly nicely, but still above the 3% rate. And at least in the U.S., the Federal Reserve is pretty keen to get inflation down to their policy rate of 2%. So this kind of led to, it's just, we've talked about this a bunch of times, how wrong economists have been. And this seems to be just
right.
more.
Except for Ira.
Except for Ira Kalish, because he is our favorite economist, because he seems to be mostly right. But if not to rehash too much stuff, but folks may remember, if you go back to November, the narrative at that point was this year we were going to get 4 to 6 interest rate cuts starting in January. Well, we didn't get an interest rate cut in January. And then kind of by the end of the year, it was, maybe 3 or 4 starting in March. Well, now it seems pretty clear we're not going to get an interest rate cut this month. So this higher for longer interest rate narrative seems to be gaining more traction, and you're getting everything from no cuts the rest of the year to maybe just a couple. But in any event, the coming down of interest rates seems to be further pushed out. And, we'll see what that ends up meaning or driving as far as economic growth in the back half of the year.
All right. So I don't know if we've ever talked about this. I am actually a massive fan of The Who. I think I watched Quadrophenia and the Kids Are All Right 100 times in my youth. Saw Roger Pete and play Quadrophenia. It made me think about the changes at Under Armour. Meet the old boss, same as the new boss.
Well, yes, Kevin Plank. I think it's great that you work at a active sporting goods kind of company and have the name Plank, but maybe you should be working at a yoga company. I don't know. In any event, Kevin Plank, who is the CEO of Under Armour for many, many years, stepped down a few years ago, is back. And he is taking over the helm as Under Armour continues to struggle. Now, one of the things we've talked about, I think a couple of times, was that Under Armour's new CEO, Stephanie Linnard, had joined from Marriott, and that was kind of an interesting choice to bring somebody from outside of traditional retail to try to reinvigorate the brand. Apparently, that either wasn't going very well, or Kevin just got very disgusted or something. I don't know. But in any event, Stephanie Linnard is out after just over a year, which I would argue is really not enough time to turn things around. But who knows what else is going on?
But yes, 6 months. I mean, you're inheriting 6 months of stuff before you can even get anything done. So interesting.
Yeah. So I don't know if that was a bad cultural fit or something, or whether just he's a control freak and needed to feel like he needed to jump in. But yes, that was I think quite shocking, actually, that he's back. So we'll see what that portends for Under Armour. But they definitely need to do something different because their business has been struggling for a bit.
Now, on the other hand, Fossil actually is going reverse. So what's going on there?
Well, the longtime CEO, Kostas Kartosis, I think I pronounced his name like it's a disease, so I apologize for messing that up. He's been the CEO for, 15, 20 years or something. He's actually the brother of the founder of Fossil. He is stepping down. Fossil's also a business that's been going through some pretty big struggles for quite some time. And actually, my former colleague, Jeff Boyer, who joined there, well, Jeff's been the CFO at several companies, including Sears, where we worked together. Then he was at Kmart. Then he was at Michaels. He's been at Fossil for a while. I believe he was elevated from chief financial officer to chief operating officer as well. Well, he's stepping in as interim CEO and joining the board. So we'll see if he ends up getting that role permanently. But Jeff's a very good guy and has been at Fossil for quite a while. So I don't think, in terms of big shifts or big learning curve, basically the founding family is now out at Fossil and some new leadership. So we'll see if that gets them the jump start that they need.
So we hear about this massive new store opening by hard discounter Aldi. I also just saw a survey come out that they were voted, even though they don't have tons and tons and tons of stores, so they will, but they were voted number 2 most popular favorite grocery store in America. So pretty impressive.
Yeah, well, I think this segment overall is, one door opens or many hundreds of doors open while others close because we've got a bunch of news on store openings, but we also have a bunch of news on store closings. So yeah, Aldi, which of course our European listeners will know is huge in Europe, they are significant in North America, but really starting to grow. So they're going to open 800 stores. That was their big announcement. It's very interesting to me just broadly, and I'm sure we'll come back to this at some point. There's so much going on in grocery. Not only do we have the growth of H-E-B and Aldi and Trader Joe's and a bunch of other chains that are newer or regional or whatever, adding quite a lot of stores. But of course, we've got whatever Amazon's going to end up doing with Fresh and just in general, all the investments, possible merger between Kroger and Albertsons. So it's really, really
that merger. Space. I'm not sure this timing is coincidence. I mean, it was just last week where I think it was the government said they were going to sue to prevent that merger.
Correct,
so I'm not sure this announcement is exactly coincidental of the timing. You know what I mean?
It may not be. It may not be. So I think, it's kind of, it's not like grocery is inherently a growth area. So adding all this capacity is going to make it a interesting battle for market share, I think. Then we've got one of our favorite brands, On Running, which reported a really great quarter. We don't really have the time to go into the details, but trust us, it was excellent. But they also announced that they are going to be, I guess they kind of further clarified their plans because they have announced they intend to open more of their own stores, but they plan to open 100 stores, which, for a brand of their size is pretty significant to their base. So that's pretty exciting. And we'll come back in a minute to kind of contrast that with somewhat of a direct competitor who's going the other way. But then we had quite a lot of store closings announced last week or so as well. Family Dollar, which I guess is the number 2 dollar store chain in the world, had another pretty bad quarter, actually quite horrific quarter, and they're going to close 1,000 stores. Now, one of the things about dollar stores that people may know is they have just a huge number of outlets. So 1,000, for many retailers would be, that's the whole chain, but for them it's a relatively small percentage. But I think it's the dollar store category in general is kind of flattening out, but Family Dollar's performance relative to Dollar General, which is the main competitor, has been quite lacking. So they're taking some actions to try to get on a better trajectory. And then
talk about that for a little bit. What I don't want to say confuses me, but I find interesting is they always say, they're closing because of the economic times, so to speak. But aren't dollar stores perfectly positioned for the more difficult economic?
Yeah, it is a little bit confusing. I think, overall we're seeing more focus on essentials and this trading down phenomenon. But at the same time, for the very lowest of economic conditions, they're really getting squeezed. And so I think this is a function of the more narrow customer segment they serve really, really being challenged by inflation in particular, and just, healthcare costs and other kinds of things that are squeezing them. As well as I got to think there's a bit of overshooting the runway in terms of number of stores. It just seems like, how many of these stores can you possibly open? And it's not like you're still, in many cases, not competing with Walmart or, some other form of low price retailer. So I think it's a mix of things going on here. Then we'll eventually get to some things that are more positive, but Outer Voices, which is a digitally native vertical brand that was pretty hot there for a while, they announced that they're closing all their stores, which caught
quite
a lot of people by surprise. Yes, quite abruptly. They've had some real drama in leadership there, so I don't know if this is just kind of continuing drama. They intend to apparently focus exclusively on wholesale, and I don't know if this is super specific to Outdoor Voices or just generally, I've said a few times that I think we're going to find that the reliance on store growth, as much as it makes a ton of sense at one level, isn't so easy to do and make profitable. And some of these very aspirational goals that people have articulated are not going to turn out to work for them. And so that may be a bit of what's going on here, but it may be some other things as well. And then this has been in the news, I guess, for a few weeks, all the trials and tribulations at Body Shop.
Yeah.
So they're obviously in a world of hurt on a global basis, but in particular, they announced they're going to exit the Canadian and the U.S. markets where they have been for a while. So
yeah, it's very messy business because the business, this happened with Toys R Us in Canada. The Toys R Us business was a thriving, good business, but the corporate parent went and took all the money, and that's what happened with the Body Shop. The Body Shop Canada was doing fantastic, and they got stripped of all their money, and then 1 week, literally within the week, they closed, told everybody they're not going to take gift cards, and that's it, we're done. But I should say that's it, we're done. They actually are claiming that they've only going to close half the stores. I know they closed them all in the U.S., but for some reason, they say they're going to try and run half of them here in Canada. Yeah. But it's a messy business for sure, man.
So then, somewhat related, and I guess this is in the category of hate to say I told you so, and I'm sure you're going to add the Hives classic song to the final edit of this, just to bring an old reference a little bit closer. Back in the 60s and 70s with The Who, so I thought we'd move into the 90s at least, or whenever that song came out. But longtime listeners will know that when Allbirds went public, which was November of 2021, it was a very hot IPO. Their valuation, I think, was in the vicinity of $4 billion. And I was very vocal on social media and in a subsequent Forbes article that was an insane valuation. And I'm not going to go into all the reasons why I think that, other than nailed it. I mean, it's not that I'm happy about this, but the stock closed at 73 cents. That's down 97% from that time. They did announce, as we predicted, I think, of several episodes, that they were going to announce some store closings. So they finally did announce that they're going to close 10 to 15 stores this year. They reported their earnings, which they were at a negative 70% operating margin. Joni Zwillinger, I think that's how you say his name. I'm bastardizing CEOs' names today, but he's one of the co-founders. He is stepping down. And things don't look good there at all. I suspect that they are not going to be able to turn this business around as currently configured. I think, whether that means they need to seek bankruptcy to get out of these additional leases or whatever. They're not in a terrible cash position, but at this rate, they're going to find themselves in a not too good cash position fairly soon. Yeah. So I don't know if they are, on the brink of bankruptcy, perhaps, or positioning themselves for a sale. But it's hard to imagine how these guys are going to make it because this business is almost in free fall. Do
you think that, just thinking about Allbirds at the strategic level, do you think that they overestimated underestimated the market size, they under-executed, or that the sustainability angle is just not viable at scale. I don't want to say any more, but it does seem that people are paying less attention to a singular proposition that's based on sustainability. Any thoughts on that?
Probably a little bit of all the above. I do think it might be interesting to come back and do an episode on why so many of these DTC brands have not lived up to their potential. I think, so I'll try not to go too deep on this for purposes of today, but I think in Allbirds' case, it's just a shoe, I mean, it's not, I think they tried to see the business as, it's like this massive lifestyle brand, and therefore they invested really heavily. I mean, they rolled out their stores way too quickly. I think it's quite obvious, but, in retrospect, but at the time I was like, how do you go from 2 stores to 35 stores in like 2 years? Like that is just not a sensible strategy unless you have enormous data to support that kind of growth. So they invested well ahead of the curve. I do think sustainability is a bit of a limited positioning when you're just
to rely on
shoes, basically
singular.
To rely on. Yeah, at least until you can really build that. It's one thing when you're Patagonia, right? But when you're getting started. But the other thing I think is they were too much of a trend. And sometimes trends, they can go all over the place. Like we've seen Crocs, be in favor, out of favor, now in favor. Birkenstock, same kind of thing. So you don't always know. But it's really hard when you're just getting started. What were those wheelies or whatever? There was a shoe that was popular So
for a minute, popular for a minute. Yeah.
So it's not always easy to know which things are going to endure or not. But I felt like they were just very limited customer focus. You had a certain kind of person interested in sustainability, willing to pay this price point, like that style, and they never really were able to get to a point where they were really a powerful enough brand to get anywhere close to the kind of investments they were putting behind it. So, we'll see. We'll see. Again, I hope they can figure this out, but they're certainly in very, very precarious position.
And it's a great conversation for a separate episode, because there's also the wholesale versus direct model, because On seems to have nailed that, right? They both have wholesale distribution, and they're pulling on all levers versus just relying on one lever. Now they're pulling harder on the DTC lever now that they've got a fair bit of distribution. So that's going to be a good episode. All right, let's talk about Kohl. So you sent me the note. If I live long enough, I knew you would say something nice about Kohl. So now's your chance.
Well, to be totally transparent, I did put sort of nice, because I put sort of in parentheses. But so just to talk about their financial performance quickly, as we knew would be the case, they had a very weak quarter, as all the department store guys seem to be having. Their comps were down 4.3%. They did provide a little bit more optimistic outlook than some others have provided. Basically said they were going to be flat. Part of my prediction is flat is the new up. They did a good job, just like Target did, on improving their profitability. They took costs out. They got their inventory position much more in line with their sales trend. But the bigger news, I think, and the interesting news is they're signing a deal with WHP Global, which is the parent company of Babies R Us, which people may remember got Babies R Us stores and Toys R Us stores all closed over the last several years. Yep. And they're going to introduce Babies R Us sections to approximately 200 U.S. stores. So these will be 750 to 2,500 square foot sections in their store focused on baby essentials, furniture, that kind of stuff. And I like this. I think that there is a lot of existing brand awareness and connection to the Babies R Us brand. This is largely a new category of goods to bring into Kohl's. It gives them some differentiation. So I like it. And I think, they've had a lot of success, allegedly, or like they claim, with Sephora shops. They did mention within their earnings release that they expect Sephora shops to get to about $2 billion in sales within the next couple of years. And they're planning to open more of these small store formats that will feature Sephora. So, if it's bringing new foot traffic, bringing some new customers in, giving them a point of differentiation, I think it's pretty powerful. Is it going to turn around the company? No. So, we need to keep this in perspective. But in terms of something that I think could be meaningfully additive. And I said also, and we'll see, because we're going to see Tom, by the time this episode comes out, we will have seen Tom Kingsbury, their CEO, speak at Shop Talk. So we'll see what else we learn about that. But he does have experience from his days at Burlington, which had a very strong baby business. So I also think, okay, maybe you could have seen this coming. And but it is a business he knows well. So I think the chances of executing it could be good.
Question for you. Is there any brand confusion opportunities here because Macy's has got to deal with the Toys R Us stuff.
Right.
This is not a novel approach. Is there any risk to that? I mean, Kohl's and Macy's will certainly overlap in many malls, if not many markets. Do you think there's any confusion risk behind all this?
I think there is. I also think it's interesting. So several people commented that they were surprised that Macy's, given what you say, that they have the Toys R Us partnership, that Macy's would have passed on this opportunity. Mm-hmm. Now, I have no inside information on this, but my guess is Macy's didn't pass. My guess is Babies R Us didn't want to go to Macy's. And I would also guess that WHP regrets the Toys R Us partnership with Macy's. And I say that because if you think about the shopping patterns for baby stuff, toys, etc., it's all off the mall, number one. Number two, now we know Macy's is going to 350 locations. Kohl's has over 1,000 locations already and is adding. And so when I think about how people shop, running around to the grocery store, running errands or whatever, it makes a lot more sense to run into a Kohl's to pick up toys or to pick up baby stuff, because your competition there is Walmart and Target and those kinds of things. It's not, Nordstrom and Macy's to any large degree. So it wouldn't surprise me. I don't know what the length of the Toys R Us deal is at Macy's, but my guess is WHP would love to get out of that deal and get into Kohl's. And I bet you Kohl's would be, maybe they've got some conflict because of their Disney partnership. That's the only other thing I thought was maybe they can't do it because they're precluded because of their deal with Disney. But I obviously don't know the ins and outs of the contract. But so we'll see what happens with Toys R Us. But I think this is going to be a good move for Kohl's.
Well, lots of interesting news this week and lots of interesting strategic takes on things. It's not just a ticker of news. There's lots of interesting decisions being made. I think they're reading your books basically and making bigger swings. All right. Well, that's it for the news. Now, before we get to our fantastic interview with Michael from Harrods, let's hear from our presenting sponsor, Celonis. Want to ramp up speed and productivity for your entire retail operation? In the Celonis Process Mining for Dummies Handbook, we show you how Celonis process mining technology, enhanced with process intelligent AI, can help you streamline performance across your entire retail business so you can drive lasting value from end to end. That means purchasing, supply chain, omni-channel execution, merchandising, and customer service processes, all managed and optimized through one powerful software solution. To get your free copy of Process Mining for Dummies and see how it's generated millions in value for brands around the world like Aldi, Globus, and Edeka, head to celonis.com/remarkable retail.
Michael Ward, welcome to the Remarkable Retail Podcast. Where do we find you today?
Well, I'm in our beautiful, beautiful store in London.
Well, I suspected that might be the case, and I'm actually going to be in London in about a month, and I haven't been in Harrods in quite some time, so I'm looking forward to making a return visit. But before we get into the remarkable story of the Harrods brand, we generally like to start off by learning a bit more about our guests. So would you mind sharing just a bit about your personal and professional journey?
Yeah, I started off as an accountant, which for a creative industry is slightly odd, and was finance director for 2 PLCs before joining a pharmacy business. And then from the pharmacy business became the CEO of that business. We had about 1,600 stores across Europe, and we were the largest wholesaler of pharmaceuticals, which again seems a very odd background. And then was seduced into private equity for 2 years and bought about the 5th largest supermarket at that point in time, but realized I absolutely hated it because the ability just to do financial manipulation rather than be able to be value creative was something I longed for. So when I got the phone call to come to Harrods, it was a very easy decision.
And how long have you been in your current role?
17 years.
I imagine you've figured a few things out by now, but retail is always changing, so there's always things to figure out. Now, I imagine that the vast majority of our listeners have some degree of familiarity with Harrods, but perhaps like myself, they haven't been there in a while. What would you highlight about the business and perhaps some of the newer things that folks might want to check out?
I think that the real thing for Harrods is twofold, one of which is we are the real epitome of the house of brands, where you see the very, very best of the very, very best brands in every category, whether or not that be the beautiful Laura Piana children's wear, the amazing Fendi furniture. Every category is carefully curated to get the very, very best of the best. And then the ability to get the most exclusive product that you can't find anywhere else, to be able to get that dress and that perfect fitting of that dress is something that we really push for and strive for excellence.
Michael, there's no question. I mean, even getting back to Steve's question itself, Harrods, probably the most famous store in the world, 175-year anniversary this year. You've been at this in your role for... you've got an amazing tenure. What are the ways that you've been keeping the brand at the forefront of experiential retail? Tremendous transformation happening in retail, and you're still at the forefront. What are those things those levers you pull, and those philosophies that you impart?
I think the two things. The key is we are totally customer centric. So we built a single view of customer model. We clearly identified the personas behind the brand, and everything we do is central to that. So understanding what a consumer wants and needs and be able to be proactive in providing that is absolutely central. And having reliable data, which gives us almost three-dimensional aspect to this. If I look at a super brand, they have a single-dimensional view of a customer. We know the whole lifestyle. We know about their beauty regime. We know about their regime in food, in furniture, in children's wear. And the ability to be able to look at that holistically is hugely important. So on one side, we're an amazingly data-driven organization. But on the second side of it, we have this always striving for the very, very best and creativity. And if you come over to see us, you'll see that in how we've designed our rooms, how we've designed the total exquisite nature of how do you present food as almost as a painting of art. And each bit is very detailed and very carefully curated.
Could you unpack for us for a few seconds? How do you capture that data? Is it something as like a license plate or a loyalty program doesn't seem enough? Like, in what ways do you develop that three-dimensional view of your customer, customer at a time?
Every customer has a loyalty card, so we have about an 85% capture rate of every transaction in the store.
85%. So 85% are engaged with that program. That's fantastic. Let's talk about, let's shift gears a little bit. Let's talk about digital. So obviously, most of your tenure, you've been dealing with this right up front, digital disruption. The department store format has had its share of challenges. How do you integrate these two? How do you keep Harrods intensely relevant amongst all those shifts? You and I were talking off mic about some fantastic product I was just looking at here from Toronto. Explain how you connect those dots to make that relevance happen.
I think that the first thing that we do is we realize we're not going to be perfect at it. And I think that by doing that, it allows you to view it in a slightly different way. The customer wants information. The customer wants to be able to do pre-searching. And the customer wants the very best range and service. And you've got to really strive to provide all of that. But you're never going to get the real feel and touch that you will get as an in-store experience. And I think a lot of people are trying to over-index on that and spending an awful lot of money, but failing. And what we've realized is, yes, we've got to make it beautiful. Yes, we've got to make it enduring. But will they ever get the same? No, they ever will. They'll never get that ability to touch the product, to have that interface with an amazing sales assistant. But we'll do our best, and I think that's how we've really almost moved forward on this.
So I'm curious, just maybe to go a bit deeper on that. You might know I have a little history in the luxury industry. I was on the leadership team at Neiman Marcus, Bergdorf Goodman, et cetera. And one of the things we prided ourselves on was that high level of customer service. But at the same time, and in leveraging data and some of the things you mentioned, but at the same time, as more shopping has moved online, as well as I have to imagine you have quite a large number of tourists in your store where perhaps they're not members of your loyalty scheme. How have you seen customer service evolve, and how are you responding perhaps to those shifts and maybe some of the unique challenges of having such an iconic large store?
But I think that the real key is to treat everybody equally, whether or not they're a tourist or a top shopper, because you actually never know when somebody walks in. So everybody gets the real high quality of the Harrods touch. I think the second part of that is we continue to invest, and one of our very big investments this year is to quadruple the size of our personal shopping area. Wow. And that's because we really have to cocoon that customer in the very, very finest and the best service. But having data on a customer also allows you to do a lot of diagnostics. So that getting assistance of knowing what your next best action with a customer is really quite important. And we've invested very heavily in data science to allow us to understand a lot of the dynamics, whether that's share of wallet, next best action, etc., really is quite important to us.
I can imagine. Maybe shifting gears just a little bit. I mean, obviously, innovation, continuous innovation has been a big part of what has made Harrods so successful over the years. I imagine at the same time with such a well-known brand and just the desire to drive profitability and take the brand to the next level, there are a lot of different opportunities for potential growth. So I'm curious how you think about those opportunities. And in particular, I was reading a bit about this new private members club that you opened in Shanghai. So perhaps you could just tell us how you think about growth more broadly, leveraging the brand, but also maybe a bit about some of the particular initiatives like the private members club that you've been pursuing.
If we start with the private members club, China was always an important part of our strategy. And it was quite obvious to us that it was always going to go back into China. But they are still international customers who are in London on a regular basis. So Shanghai is about maintaining that relationship with the customer in almost a follow the customer strategy to create a unique environment that they can feel very comfortable, that we can create almost circles of people with like minds, and we can serve them at a very high level. And the best example of that is providing them with food from the finest chef in the United Kingdom, Gordon Ramsay. So that sort of communities of passion, shared interest, and always connected with Harrods, with the mothership, is hugely important to us. And we wanted to experiment and see how that would pan out. And the early stages are very successful to us. With regard to the store, I think all of it fits a natural sequence, which is in and around where you prioritize the needs of the customer. Yes, profitability is important, but other aspects are also equally important. So we've invested very, very heavily in an absolute circle of beauty because we wanted to be able to maintain our relationship with the younger customer. So having that beauty as the entry point for the customer has been hugely important to us. And we haven't done it in just simply having authority in beauty, skincare, and color. We took it to another level in terms of having the highest level of service in our treatment rooms. But we also built a wellness center where we have semi-invasive surgery, we have M-Sculpt, we have cryogenic freezing, vitamin infusions, etc. And then we topped it off by producing the most amazing hairdressing salon in Europe with all of the services from post-cancer treatment for scalps and wigs, for treatment of disease, the whole thing, so that we wrapped beauty up as being an absolute service to that local customer. And that allowed us to pivot post-COVID for the tourist trade coming back slowly. And that was the priority of actually gaining that local customer. So yes, profitability is important, but it's also in terms of looking at your customer base, looking at making sure you're investing in the customer base of the future and connecting to the customer base that's going to have longevity.
Let's pull on that global thread a little bit more. I mean, your customers are very global by their nature, and you're see yourself, I think, as an international business. Any other plans to extend that global reach to other parts of the world? Or
as a concept, we don't think that we can replicate what we have in Knightsbridge internationally, because we need the authority in every other category. And the big mistake that department stores make is they go internationally and they lose their personality, and it dilutes their brand. And we won't do that. What we have done is we've taken the beauty concept and we've opened 5 stores which are playful, upmarket and playful Sephoras, but based upon very high levels of service. And those have been very successful for us, and we will be rolling out more and more of those in the UK. And I think as a concept, it's pretty unique around the world. And I think there's a great opportunity for that as well.
No, it's very exciting. I'm really looking forward to checking that out. The other thing, or among the other things that I'm interested in checking out, is your talk at the World Retail Congress in Paris next month. And we got connected to you through our friends at the WRC. I'm wondering if you might give us just a little bit of preview of some of the things you might be digging into in your remarks at that event.
Well, I think the WRC is always a great setting to explore things that we probably won't know we're going to explore until we get there. And I think the fact that we've got a great panel means that we've got a great opportunity of 2 people who are doing broadly the same business, bouncing different ideas. And I think that that's the part that's really exciting.
So this season, we're especially focused on what remarkable leaders are doing to drive transformations. He's got a new book out that is focusing on this area. Are there 17 years of leadership, tremendously present at the forefront? Are there 1 or 2 key leadership lessons from all this experience that you've had to really, that you could impart that have made a difference in your career?
I think the one thing that is always my worst criticism is I never think that things are not possible. And therefore, whatever we do, whatever we strive, continuing to push and push and push and push means that the barriers get higher and higher. And I think that that's one of the things that's really been important for Harrods. It wasn't being, we can do that. We can do a Michelin-starred chef. That's fine. I want more than one. I want people like Massa to come from New York and cook in the store. I want Gordon Ramsay to be in the store and in Shanghai. I want Tom Kerridge, one of the finest British chefs, to be in the store. I want all of this to actually Jason Atherton here. So it's not just simply saying, we've ticked the box with one chef. I think the other point as well is people talk about experiential retailing. And I think it's that they're putting a piece of paper over a crack, if I'm honest. When we talk about experiential retailing, if you go in our chocolate rooms, we built a chocolatier so that you could see our master chocolatiers making chocolates. And not only did that, we employed the very best people who win all of the competitions for chocolate in the UK. When we made a coffee and tea room, we placed a coffee roaster in it so that you could see every ounce of Harrods coffee being roasted and the smells wafting across the whole room. It's part of our DNA is being absolutely experiential. And I think that that's been an important driver for us to be different from the crowd.
Let me ask you to stretch that one out a little bit. Not everything works out the way you plan them as you set these very, very high milestones. Is there an example that you can think of where it fell short and how you learned from that, or what lessons you imparted to your team at Harrods?
Yeah, I'm my worst FD's nightmare. We built the beauty rooms, which were beautiful, but we built a powder room, and we did exponential retailing in the powder room. It just did not work. So after 6 months, I turned around to the team and said, "This isn't going to work." And my finance director, "Do you realize what we're going to write off?" I go, "I do, but it's still not going to work." So we built the biggest Moet Chandon champagne bar in the same space. And it is amazingly successful. So from a powder room doing your face to having the finest champagne couldn't be a bigger vault fast, but you can't make something successful that's not. And actually, as long as you call it right 80% of the time, the 20% of mistakes go to make the 80% even better.
Oh, that's a great philosophy. Well, listen, Steve, you're going to have the opportunity to visit in person. I haven't been to London in a couple of years, but I'm thinking I'm going to go now. This got me very, very excited about popping back into Harrods. The website isn't doing it for me. I got to go see that champagne room. Listen, Michael, thank you so much for joining us on the Remarkable Retail Podcast. It's been a real treat getting your perspective, and thank you for giving us a bit of a preview, and us and the listeners a bit of a preview of what you'll be talking about in Paris at the World Retail Congress. I wish you much continued success and safe travels. And like I said, on behalf of Steve and I, thanks for joining us.
No, thank you very much indeed.
I was struck, Steve, with the interview with Michael, that his enthusiasm, and he's been in that organization for a long time, just his enthusiasm came out to me especially when we were starting to talk about that champagne room, and that you could get so excited again and animated about, this is a great idea. I love this idea. Because, he's been running that business for a long time, and it's one of those businesses that holds itself up quite high, and I think people have very high expectations of it as well.
Sure. Well, I agree. It's an enviable position to be both the custodian, I guess, for lack of a better term, of such a legacy brand, and having those things that people want to come back to again and again, but at the same time having the latitude, I guess, to try new stuff and to get into interesting partnerships with other cool brands. I mean, it's not the best comparison because Harrods is so much bigger and well known. But when I worked at the Neiman Marcus Group, we owned Bergdorf Goodman. Well, Neiman Marcus still owns Bergdorf Goodman. I don't work there anymore. But some of the things that we could do at that Fifth Avenue Bergdorf Goodman store, with the kind of customers we had, the tourists we would get, the position across from the park and the Apple store and everything. Like it just opens up to so many interesting possibilities, and it really get your creative juices going. So when you compare a store like Harrods to some of the other retailers we talk about, which are much more anodyne, in what they can do or willing to do in some cases, they probably could do more. They're just maybe afraid to try it. So I think it's great to be able to see that creativity and to do something that's really, really is, amplifying the wow, essentially.
Yeah. And I guess it's also good to have deep pockets, because I don't know if anybody's been tracking their evolution over the years, but they're now owned by the state of Qatar with their sovereign wealth fund. So patient money, which is what it takes, I think, to run a luxury department store in this era. Well, you got to take lots of pictures, and we'll post them in some way, shape, or form on LinkedIn when you go there, so we can add some visual. And do say hi for me in Paris. As we said, he'll be on the stage at the World Retail Congress. So for now, let's leave it there. Thanks for tuning in. New episodes of Season 8 presented by Celonis will show up every Tuesday, so be sure to tell your friends and colleagues in the retail industry all about us.
I'm Steve Dennis, author of the best-selling book, Remarkable Retail, and my new forthcoming book, Leaders Leap, Transforming Your Company at the Speed of Disruption, which will be published in April and is available for pre-order at booksellers everywhere. You can learn more about me, my consulting, and keynote speaking at stephenpdennis.com.
I'm Michael LeBlanc, consumer retail growth consultant, keynote speaker, producer, and host of a series of retail trade podcasts, including this one. You can learn more about me on LinkedIn. Safe travels, everyone.